Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, yesterday unfolded pretty much as I expected it would, with a down day, as I'm expecting at least 2 sessions down, which Wednesday's session should complete that pattern and ultimately fill the gap and some other elements, which I'll go through in detail in the technical section here in just a minute. I have to mention what happened earlier tonight with the presidential debates, probably the single most embarrassing moment in American history. I'll leave it at that, but overnight we've seen substantial amount of action on the futures, where early on they started to trade all the way up to 33.58 and then collapsed down to 33.03. But as we come into today, we're going to be looking at the ADP numbers. I don't really have a high expectation for this report having a big impact on the markets, but it is expected to show 700,000 new jobs. There's a very low correlation between the ADP report and the employment report that will come out on Friday. So there's not a lot of relevance or importance on that particular report. We're also going to see the GDP come out, and that's expected to show a minus 31.7% drop. These are estimates from the numbers during the COVID lockdown, so these numbers are pretty bad. They're really being blown off as not having much impact at all, but this is the third estimate of GDP. We'll start to see the recovery when we get the first estimate on Q3 as we come into October and November. Expect that number to come off the lows substantially, and that will be the more interesting number to look at, and that's down the road. So GDP is not likely to have a lot of effects on the markets today. The other thing that will be out is Chicago PMI. That's expected to come in at 53.7. That's up about 2.3 from the last report. Once again, not really material, and I don't think anybody really cares about any of these numbers that I just discussed. The markets will start to look forward toward that claims number, expected to come in about 850 plus, and then the continuing claims, once again, if it comes in below 12.2, will be bullish. Anything above that number, it was 12.58 last week, is going to be negative. Markets aren't going to be really affected by this number as well, as market participants will be focused on the employment numbers coming out on Friday, and that's going to be the big report for the week, and that will be the thing that ultimately sets the tone. From an economic viewpoint, there's not going to be a lot of impact. It will all be about Friday as we come into the close of this week and setting up the patterns for the month of October. Let's go ahead and take a look at the charts and see what they're telling us for tomorrow. As we review the WaveTech database, there was very little activity overnight, as we only had about 220 buys and 100 sells, so a basic rotation. The short-term database is still at 10.68%, and I didn't expect to see much with the slight down session yesterday. I'm still watching this database closely to remain under that magical 26% over the next 5 to 10 days. We could extend this pattern out depending on what type of traction we can get, if we can trade up into this upward C leg that I'll discuss with you in a minute. Overall, there's not anything going on with the database that's going to give us any insight into tomorrow's action. As we review the S&P futures, as I mentioned in the opening comments, we have seen some amazing action overnight. The high's been 33.58, low 32.91, so well over a 60 handle range. And we're now rebounding back up toward the 33.11 area. But what this is setting up is the filling of that gap on the cash chart, which I'll bring up here in a minute. Looking at the market grid, what we've seen so far is just about an R2 print, and we almost hit an S3 low. We're short of that, but about 10 handles short. But we traded between S2, S3, and R1 and R2. So most of this range is set up for the day. And if we continue to stay somewhat weak coming into the open of the US, we're likely to see that cash market fill the gap. Going to the cash market, that gap is between 33.06 and yesterday's low 33.27, so we're likely to mostly fill that today. And as I discussed in last night's video, I'm looking for a 3-2-3 or a 3-2-5 pattern, meaning that we had 3 days up, we get 2 down. Today should be the low of the pattern, and then we'll see a reversal and start to move back higher towards some of those levels that I mentioned last night, which suggest a move to around the 33.80 is still a key pivot number, and then 33.97, and the extremes are set up to be as high as 34.40. The good news is we have a live stream, so I'll be able to go into a lot of depth on the live stream, so I would definitely join that tomorrow at 1:30 Eastern time, and I go from 1:30 to the close. As we look at the NASDAQ, it's actually had the similar action as the S&P has had. We've traded between R1 and R2. The R2 number is 11,467, a high 11,427. And on the downside, S1, 11,276, S2, 11,208. The low has been just below that 208 number. So we're printing almost down to an S3, 11,140. As in the S&P, I think we've seen most of the range, and we're likely to see some pressure coming into the U.S. Open and then looking for a rebound. We should hold S3. I don't think we'll get down to the STX number and get to the extremes. Just as in the S&P, we get 3 days up. We're actually in that 2-day sideways mode as a 3-day move and move much higher. As I've been talking about for weeks now, the NASDAQ, it has a higher level of volatility, and these moves are slightly exaggerated as they unfold. But expect to see it stay within the range we've already printed, and the key tomorrow will be the close. Look for a close potentially above the 11,314. If we can get above that level, then that's going to be fairly positive as we come into Thursday and complete the end of the week. Next market I'll cover is the US dollar. Not a lot going on here. We are seeing a little bit of the rebound. As I discussed in last night's video, I'm expecting to see a moderate rebound. With everything that I set up in the last couple videos have actually happened. The dollar weakened, gold went higher. Now the opposite should happen. There should be a pivot where the dollar will recover and gold will decline back into the numbers that I laid out in the video last night. This market is printing right now. It's at a high of 9,400. R1 is 93.99, so R1 hit. On the downside, 93.75 is S1. That should hold. If anything, we'll see a print up toward the 94.13 and R2 print. The final market I'll cover tonight is gold. There's a couple things going on with gold that are significant. The 10-day moving average, I discussed this last night, is right now at 1901.90. We saw it print up yesterday to the 1904.80 level, came right into that range I talked about that was in the market grid yesterday. And looking at today's action, market grid suggests that 1910 is the extreme. The high so far, 1904.60, would basically equal that. We're seeing some selling coming in now, printing below S1. Look for an S2, possibly an S3 number today, down to 81. And it's possible to go all the way to STX, because I believe that we're going to retrace back toward the bottom end of the grid for the next couple of days. You're also noticing that the PPM1 is in full out trend mode at 0.41 down. PPM2 is 0.21 and PPM3 is 0.20. So gold is in a short-term downtrend. There's not a lot of upside. There was a great trade off of that bounce out of the pattern, but that's over, and we're going to continue to fade. If you got lucky enough to fade that rally yesterday or even overnight tonight, then you've got a good position. That stop would be above 1901.80, but the downside is limited too, down potentially down to the 1874 to the 1862 levels. This will complete the video for tonight. Remember, we have a 2.5-hour live stream tomorrow. Look forward to seeing you all there. Make sure you have all your stocks and other items that you would like me to talk about. We'll see you then.